Welcome to Barchart series of webinars designed to educate you about a variety of market concepts, inform you of the features and tools Barchart provides related to these concepts, and finally to offer you some trader's insight to help you make a more informed investment decision. Today's subject, trading stock momentum through highs and lows. So as a former floor trader, I've come to live and believe in many cliches and adages. And one that rings true every time I hear it is that you can't make a new high without taking out an old high. But, as a trader, I loved making that new high print. And this simple saying is the basis of trend and momentum trading. Remember, an uptrend is defined by a series of higher highs and higher lows. And so without taking out a former high, you can't be in an uptrend. And Barchart's new highs and lows page, along with Barchart's stock screener, allow traders to identify stocks that are making higher highs throughout multiple time frames. And relative strength and momentum strategies believe that this is the key to finding stocks that will outperform the broader market as well as their peers. Strength begets strength. Hello, everyone. My name is John Rowland, and I'm Barchart's head of trading education, and today we're going to explore this concept of higher highs and relative strength, momentum, to identify candidates that are outperforming in light of this current bear market, but also to show you the tools to find your own stocks as, let's say, momentum and trends shift from sectors or industries and to the outperformers within and who are making these new highs. So before we get to that, please welcome my partner and our moderator, Barchart's project director, Jean Baker. Hello, Jean.
Hi, John. How are you?
Very well. And how was your 4th of July week? And
it was hot. It was nice though.
Little fireworks and barbecue.
A little bit of both, right? How about you?
I was on the East Coast. I was enjoying some blue crab and corn on the cob. It was some nice Jersey corn on the cob. It was really, really a nice, beautiful weekend for us.
Sounds wonderful.
It certainly was. All right, so you ready to get started, Jean?
Absolutely. Let's get this show on the road.
Get this party started. Okay.
Yeah.
Excellent. All right, just remember that today's session is for educational purposes only, and that the decisions to buy, sell, or hold or trade securities, commodities, or any other investment involves risk and are best made based on the advice of a qualified financial professional, and that under no circumstances shall we be liable for any losses or damage you or anyone else incurs as a result of any trading or investment activity that you or anyone else engages in based on information or material you receive through barchart.com and or our services. Okay, so let's you always practice and it never works for me. So let's start from the bar chart page. Now I'm going to just go into under stocks. I'm going to go under market momentum. And what I want you to notice here is under here, we're looking at a summary of stocks with new highs and lows. And we're looking at, the 5,300 or so stocks. And today, only about 32 stocks are making a new year-to-date high, less than 1%. Very few amount of stocks, but yet in face of even the tape that we've seen today, there are stocks that are performing. Now, if I go to the S&P index and I look at that same thing, new stocks that are making new highs in the S&P, only one stock is making a new year-to-date high. Matter of fact, that one stock is making a 52-week high, 6-month high, and only two stocks are making new 3-month high. Well, the question I'm sure you're asking yourself is, what is that stock? So I'm going to screen on the S&P list. I'm going to come in here, look on new highs and lows. I want to look at a new high date, today's date, and I want to see if I'm making a new year-to-date high. I'm going to add that to my filter, and I want to know, was it made within today's session? And see what the result is. And there it is. General Mills is the only stock today that is making a new year-to-date high. Now, I can come back in here and change this filter. Let's say we want to look at, stocks that are making a new year-to-date high over the last 2 sessions. And you can see, now we're getting a couple more stocks, but still, it's only a handful of stocks. So at this point, though, one of the things I can start doing is looking at, for instance, what industries are the stocks in. And so what I see here is I see insurance, I see food, consumer staples, maintenance, and, alcoholic beverages. Dare I say, these are what I would consider maybe recessionary proof or defensive type stocks. So one of the best or more successful trading strategies is something called relative strength. Now, I'm not talking about the relative strength index indicator, the overbought, oversold indicator, but what a belief that stocks who outperform, let's say 3 to 6 months, tend to outperform another 3 to 10 months. So what I want to kind of do is I'm going to start screening on these stocks that are making year-to-date highs. And in preparation for this session today, what I did was I wanted to see how many stocks were making year-to-date highs over, let's say, the last 2 weeks. And again, if we're talking about year-to-date, we're really talking about the last 6 months. Those stocks that have outperformed the last 6 months tend to outperform, for the next 3 to 6 months. In theory, this is what relative strength theory says. Again, looking at these industries here, again, a lot of these kind of consumer staples, defensive, recessionary proof stocks. So now what I'm going to do is anytime I screen on a list, any one of the lists, and I create a list like this, and I can always save it as a watch list. And so that's what I've done. I've created a new watch list called New Highs Year to Date. And I've been collecting stocks over the last 2 weeks that have fallen into this category. And you can see now there's about 12 stocks that are making new year-to-date highs. And these are the ones that I'm going to start looking for opportunities in terms of trend or in terms of making new highs. Now, for instance, let's look at the performance of some of these stocks. And if I sort based on year-to-date, whoops. Oh, come on. Some days, Gene, right? It's always like I practice, and then my screen.
Well, yeah, John, we see if we can imagine this just looking in reverse order, H&R Block.
Right. There we go.
There you go.
It's back. It's back.
Yeah.
Sometimes. It's probably my computer. It's super old.
Okay, let's pretend this is sorting the right way.
Yeah, sorting from
look at the bottom up.
Exactly. We can see that H&R Block is up 57% so far year to date, and that has been the best performer. Not only that, but also we can see that Many of our stocks, first 5 or so, are up 20% over the last 6 months, and that's a really good performance in terms of when we look at the greater market. If we think about the S&P market, it's down about 20%. The other thing, if you come to a lot of my sessions, that I like looking at is dividends, and I'm a big dividend fan. And again, many of these stocks that have been outperforming, giving me a dividend very close to the 10-year note. So again, it's kind of, not only are you getting an outperforming stock, but you're also getting a nice dividend. Now, just for full disclosure, as we walk through our process today, is that I do own a couple of these stocks. In this case, I own options as well in Lamb and Weston. If you're not familiar with this company, this is a frozen potato producer. In other words, tater tots and French fries, and who doesn't love tater tots? And then General Mills are two of the ones that I have in my portfolio. So when we talk about trend and we talk about this idea of making higher highs, one of the things that we can start looking at is the strength of a trend, or the longer a trend goes on, we're going to see a lot more number of higher highs. So one of the things we can do now is I'm going to screen on this list, this watch list that I have. And again, I'm just going to come in where it says new highs and lows, but now what I'm going to do is I'm going to screen on a number of new highs. And I can use different time frames, how a certain time frame, how many new highs. But let's just look and see how many new highs these stocks have made in, let's say, the last 3 months. Remember that idea of relative strength, 3 months to 6 months. And I'll add that and check my result. And, if I sort by new highs, now we see that H&R Block, the one that was the best performer, is also one that has made 19 new highs in the last 3 months. Now let's think about this for a second. There's about 20 trading days in a month. So you got 3 months, that's 60 trading days. This stock has made 19 new highs in 60 days. Well, what's that? That's about a new high every 3 days. That's pretty impressive in terms of a strong trend. But even like the next 4 here, General Mills, Post, Cigna, and Merck, here we see that they're making a new high every 5 to 6 days. Again, think about that in terms of trading days. A new high once every week. And that, again, is telling me that these stocks have a lot of positive momentum, a lot of price movement to the upside. And if I look at my charts, again, here is H&R Block, and you can see since January, this stock has moved from $22 to $36. That's a nice price performance, and really it's accelerated since about May. If we look at General Mills, the only stock that is making a new 52-week high today, or excuse me, a year-to-date high, again, another stock that has been trending pretty nicely. Here's Cigna, again, nice little trending up. And, here's my tater tot company, right? Very nice looking trend. If you think about this in terms of the S&P market or our broader market, I mean, these stocks are definitely outperforming. So the next question is that here we're seeing the stocks that are continuing to make higher highs as they trend higher. So the question now becomes, how can I look at this and use this information, and are these rallies of these new higher highs sustainable? How can I be confident in buying a new high? So one of the tools that we have or studies that we have available to us is called the unbalanced volume. Now, what I'm doing here is I'm coming into our templates. Now, I've created for today's session a template based on the study of unbalanced volume. Now, you can find the study on any chart by just clicking on adding studies, and you can create a template based on the studies that you want to look at. So here is Cigna, and so let me talk about on balance and what this means. It's kind of simple in theory. When a security closes higher and from the previous day, then that volume for that day, that daily volume, is considered up volume. And when that security closes lower from the previous day, then that volume is considered down volume. So unbalanced volume is an accumulation based on day to day or bar to bar, if I'm looking at, let's say, weeklies or monthly bars, based on price change, this accumulative effect. So high volume, let's say in one direction, or maybe low volume and in the opposite direction, should confirm my trend. Light volume in a price direction or heavy volume in an opposite direction of my trend could imply a possible reversal. Now, don't get caught up in too deep in this. I'll try to make it a little bit clearer as we go through our process. But the key is not to worry so much about the particular of the blue line, which represents the day-to-day or the bar-to-bar of the unbalanced volume, but concentrate more on the trend or how it relates to the security, which is represented by here by our purple line. And in case you want to know, I'm just using a moving average of the 20-day period, 20 period in this example. So as long as it's trending, that is a positive sign for us. But we can also look at our blue line in terms of like regular technical analysis in terms of breakouts and crossovers of indications of increasing accumulation. In other words, buyers, right? That's kind of what it is. It's very simple. It's a very easy idea. We just want to see accumulation of traders buying into our stock as we're making these new highs. So let me just blow this up so it's a little bit easier to see. As it's loading here. And so what I want to see as a trader is, here we see our unbalanced volume had kind of been bottomed out and then it starts rising. That is an indication to me that there is volume and accumulation. In other words, traders are buying into this particular stock. But what I also want to see is that our trend is also turning positive, and that is another good sign for me. What I also said to you is that we can look at the unbalanced volume just like we look at any other chart. So for instance, here we have a peak high. Now notice that this peak high in my unbalanced volume corresponds with this area right here, which was, a recent high. Now, what is it recent high? Well, in this price movement right here is probably a weekly high. So as price is moving up, what I want to see is my unbalanced volume breaking out from a recent high. And that would be right around here. Now, what happens many times with this particular indicator is that you will see this kind of price movement, upward price movement, but your unbalanced volume will actually be breaking out. And this would be an indication that the trend that is developing is gaining momentum or gaining strength because there are buyers behind it. Notice that we broke above this peak right around here, also as our trend of our unbalanced volume starts to turn positive, and yet that was before we actually took out this weekly high. What I want to also see is not only this increasing unbalanced volume, but as we break out of one of these highs on our security prices, which we are seeing here, again, I want to see that unbalanced volume continue to strengthen. So another way of confirming the price action that I'm seeing above a recent high gives me confidence that this trend is going to continue to rise. Now, let's go back over here again. We've kind of this bottoming action market, had a little bit of a pullback. If I'm looking at these particular highs here, right? Notice that my unbalanced volume was not making new highs as we were making new highs. This would be a sign for me, yeah, I see price breaking out of a high, but I'm not getting that confirmation. So I'm not going to get jazzed up about buying the stock or taking a position as it's making a new high. Maybe it's still in an uptrend. I will be looking for a dip opportunity. That's another discussion. What we're trying to discover is how I can have confidence in buying on rallies as we take out new highs. But notice here we came back and tested this high. There's our peak unbalanced volume that corresponds with this high. And not until we got to about here did we get our unbalanced volume break above its recent high. And at the same time, just to see how it happens, just a little before we actually broke out of that high. So once we got above that high, I have confidence that this stock is going to continue to move in a favorable way. Let's look at our recent stellar performer, and this is our General Mills. And, I kind of broke this down for you. Again, kind of the same thing. What I want you to see is like, here we had a little bit of a downtrend, maybe a bit of a correction in this stock over the last 6 months. Our unbalanced volume dipped below, and now we're seeing it starting to accelerate. That's a good sign. Now we're getting that crossover. That's telling me the market is starting to have positive accumulation, and that what I want to see now is when my security breaks above this most recent high, this looks like a 2-week high or a monthly high, I want to see also my unbalanced volume breaking above its most recent high. And do we see that? Yes, we do. And what do we see going on today? Well, today we're making a new year-to-date high, and also our unbalanced volume is making a new year-to-date high. So is that giving us confidence that General Mills is probably going to continue to rise? Yes, it is. And that's what we can use as a tool to tell us, to give us permission to take positions when we're making new highs, something that some traders might be fearful of doing. Now here's H&R Block. This is the one that has been the stellar performer over the last year. Let's look, here's our 6 months, but even look at a year, you can really see it's really had a big movement here since about mid-May. But we see a different story here with our unbalanced volume, right? Here is our peak unbalanced volume high, and this is kind of what we just saw in General Mills. It was having that small correction, and we've since made 2 new highs. But our unbalanced volume is not making new highs. Matter of fact, it's actually starting to trend a little bit lower. So this is actually a sign of concern for me. If I was long this stock, I'd probably be using some kind of defensive posturing, either looking to sell covered calls, maybe buy some puts, maybe tighten my stop off, maybe this particular low. I'm just concerned that maybe we're not in the accumulation phase, where we actually might be in the distribution phase as institutions sell stocks to the retail investors. So if I am in the stock, that's what I would be looking for. Now, if I'm not in the stock and I believe in relative strength and this stock has outperformed over the last 6 months and I think it's going to be one of the market leaders for the next 3 to 6 months, I can't get jazzed up or buy this stock until two things happen. First, I need my unbalanced volume to turn positive and us to break out of this high at the same time, making a new high in my unbalanced volume. Okay. So that's kind of how we can use unbalanced volume. Now, I have also created another template, and these are two other studies that we can use. And what these are going to do is kind of build on that ideal of making these new highs in terms of market momentum. And that one is going to be a combination of both Keltner bands and turtle channels. So let me put that on. Now, I've combined the two studies together. So what I'm going to do is just to make it a little bit easier for you is I'm going to come back in here and I'm just going to turn off the turtle channels for the time being. I'm going to disable them and we'll concentrate on the Keltner bands first. All right, so let's go back to signal. We looked at that example with the unbalanced volume. Here it is. Let me go back and change my template here. Let's do this. It's a little frozen. Okay, we can go this way. And I'm going to turn off my turtle channels. And let's go back to that yearly. Okay, so we can find that circle. Okay, so again, as a trader, first of all, Keltner bands are very similar to Bollinger Bands. Bollinger Bands are based on the statistics of standard deviations. Keltner bands are based on a formula that is very similar to what is called average true range. As a trader, what I kind of want to do is kind of similar to what we just saw in the unbalance. I like to see when my stock price goes from low to high in my bands. And then again, one of the processes I'm going to look at is as I'm breaking out of these near highs or these recent highs, these weekly highs, monthly highs, I want to see my stock price be at the high of my Keltner bands. Matter of fact, I really kind of want to see my stock price outside of my Keltner bands. This is a confirmation for me that as price is breaking above one of these highs, if I see this scenario, it's giving me confidence that this trend or this price movement is for real. I'm not getting a false breakout. Notice here, we're getting price is above that recent high and it's at the high end of the bands. Even if we look at this recent high right here, right, at that time, when we broke above it, the price of the stock was outside of my upper band. That is a positive for me. So let me go to Humana, which is another stock that has been doing pretty well. And again, what do I want to see? I want to see, my stock go from low to high, getting that crossover. And then as we break out above a recent high, I want to see my stock price outside my Keltner bands. This is a confirmation for me in knowing that I'm making a new high and that this price action is probably going to continue. Now, one of the other processes I'm going to do, and I'm just going to pause here for a second, is not only do I look at new highs as ways of seeing positive momentum, but I also have to take a step back and say, okay, am I making a new high and how is that relevant to maybe a bigger picture? For instance, let's look at Humana in terms of, a 3-year. And that, notice this purple line here that I drew. This is a very significant new high, isn't it? I mean, we're talking about a multi-year high. And now I can see, even on the weekly chart here with my Keltner bands, that we are breaking out of highs and we're on the high end. So this could be a very significant movement. This might be one of those stocks that, is starting to outperform the last 3 months and is now going to be one of the market leaders for the next 3 to 6 months. But with every system, there is a caveat, isn't there, right? They always work until they don't work, right? And this is why we need to also take that time to look at the bigger picture when we're making these new highs. Now, notice here, this is my potato factory, right? We've moved from low to high. We broke out of some recent highs. We're outside the bands, again, giving me positive confirmation. We're bounced off this purple line now. We're outside. We're trying to make another new high. We're trying to make a new high. Well, what's going on? Well, again, why it's important for us when we do these kind of analysis to always take that moment to take a little step back and look at the bigger picture. And what we're seeing here is that, yeah, my potato factory is doing really well in terms of price momentum, but maybe now what we're doing is we're bumping up against, looks like some significant resistance. So again, in terms of if I'm long this particular stock, I would be looking to put in some covered calls or buying some put protection in case of, this stock turning around. If I want to believe that this stock is going to continue to move higher, well, what do I want to see? Well, I want to see that accumulation of traders or institutions adding to their position. And yeah, we just made this new high. We made this new unbalanced high. So if I'm going to come back into this stock, or want this stock to continue to go higher, what do I need to see? Not only do I need us to break out of this resistance high now, but also I want to see my unbalanced breakout of this high. So in this terms, doesn't mean I'm giving up on this particular stock, just means I'm being a little bit more defensive. Maybe if I wanted to accumulate the stock, maybe I will wait for a correction in this one. But again, what I'm trying to show you here is how I can have confidence in buying new highs. And so what I'm seeing here is, in order to have confidence to buy a new high on this one, I got to see my unbalance starting to turn up as we take out that resistance. Okay. All right, so the other thing we can do is, in connection with a combination of new highs, is we can look at something called turtle channels. And so, in my turtle channels here, I use the 20 period. Now, turtles use 20s, they use 40s. Some of them use 55 if you're looking at a daily chart, daily periods. It just depends on the style of trader you are. I kind of use 20 in a lot of my analysis. So it's just one of the ones I use. And let me do this. Let me come back into the Keltner bands. And I'm just going to turn the bands off, but I'm going to leave the ribbon on, or at least the shaded area, so we can kind of use that as a reference as well. And let's go back to Citi. Let's start from that first trade we looked at. Excuse me, not Citi, Cigna. And again, what is going on with the turtle channels is, what is doing here is these bands, these outer bands or these channels, are showing you the highest price over a certain period of time. In other words, this one would be 20 periods. So what I want to see here is, as my stock is breaking out of one of these channels, for instance, right here, I want to see that we are expanding the channel, or this green line is going up. In other words, I'm making higher highs, higher highs, higher highs. That is an indication of a strong trend. So in combination with here's our gray area, you can kind of see with our Keltner bands, is as I'm breaking out of a turtle channel, I want to also see both that with that phenomenon that we just looked at with the Keltner bands, outside or on the top edge of my band. So we're seeing both of that. So this is telling me this stock has a lot of positive momentum, a lot of accumulation, and that this price action should continue to continue on. Now here's Bristol Myers. So Bristol Myers is a really good example of both things that I want to kind of watch for. Again, right, we move from low to high, we take out a turtle channel high right there. We're at the high end of my Keltner bands, and we're continuing to make a lot of highs. Is that a good sign for me? Yes, that is. Now, the caveat here is if I'm making a highs and it takes a long time for me to continue to push this high up, this channel up, and that length, let's say, is greater than my default. In this term, I'm using a 20 period default. That could be a sign that this is topping, or that this particular stock or security is lost a lot of its momentum. So that would be the caveat for us if we see a long period of time. Now, notice it did make a couple little new highs here, but it didn't what? It didn't fall through, right? It didn't fall through. And notice that, our price action is still inside of our Keltner bands. Remember, we kind of want to see it outside. Now, we did make a new high here, and we did push the turtle band out. No, it doesn't mean I'm giving up on Bristol Myers. It's just giving me kind of this forewarning that maybe we are kind of toppy here. Now, what I want to see? I want to see my unbalance increase. I want to see price come back on the outside of the Keltner bands as we do what? Take out this high. That would be an indication I could come back into Bristol Myers. Okay. All right. So let me see what else I want to show you here. I do see a couple of questions. I want to show you a couple other things here before our session ends. So let's do this, Gene. Let me pause for a second. Let me read a couple of these questions before we move on.
Okay, so while you go through your questions, John, let me just remind everybody out there that Barchart does have a couple options for you as far as site membership. A lot of the things that John showed you today are available with a free membership, such as putting turtle channels and the on-balance volume onto your chart, and then or creating templates to apply easily to your chart. So that's part of a free membership. Some of our advanced screening things that he was looking at, as far as screening for the year-to-date highs, saving them to a watch list. If you're looking to get heavily into some of the great kind of concepts John's teaching you here, you might want to try out a 30-day trial of Barchart Premier. You have nothing to lose and everything to gain. So suggest that you take a look at that and see if that meets your needs.
Thanks, Gene.
Sure.
Yeah, definitely, give us a spin. I think you'll really enjoy a lot of the cool features that we have. And a lot of our webinars that we've done in the past are based on a lot of these premier features. So Aaron asks, that he notices in Barchart Premium that they have a bar chart. We have a Barchart opinions, and that all of these stocks that I'm showing are all showing 100% opinions. Now I have a webinar that talks about our opinion indicators, and now we're not giving an opinion like an analyst. Well, all it is a compilation of multiple technical indicators, and then if all of them, I think there are 13 of them, are all turned positive or in an uptrend, then the bar chart opinion would be 100%, Aaron. So yeah, a lot of these stocks are trending, moving averages, a lot of these technical indicators we have in our bar chart opinion are moving averages, and just, for, S and Gs, I mean, just on Bristol Myers here, this is the 20, 50, and 200-day moving average. You can see that, all of them were turned positive. It's just in the last few days, prices kind of flattened out. Again, another reasons why I'm saying in terms of Bristol Myers, I'm probably going to be a little bit more patient if I'm going to add to that position. Okay. Jim is in the room. Hey, Jim, how's it going? And he says, how long is a trend before it's considered valid trend? So Jim, it depends on the trader, right? It depends on the trader's time frame, right? Some traders are day traders, so it depends on what they look at for trend analysis. Somebody could be looking at a 60-minute trend. Somebody could be looking at a daily trend. Somebody could be looking at a weekly trend. I know that you are more of a higher time frame trader. So I would say that in terms of validating a trend, I want to see a combination of higher highs and higher lows. In other words, probably I want to see 2 higher highs or 3 higher highs and at least 2 higher lows to validate an uptrend. I hope you agree with me on that one, Jim. Okay.
Hey, by the way, John, so
Yeah.
John's talking about Jim Van Meerten, who just asked that question. Jim is the author of our Chart of the Day newsletter, and ironically, yesterday's Chart of the Day was Cigna. Yeah.
There it is.
There it is.
Not only that, Gene, but let me do this next segment, and you're going to really kind of make your head's going to spin. We'll come back to this page in a second.
Okay.
All right. But yeah, Jim does a great job. And actually, since we're talking about it, notice just look at the headline here is how does one of the tools that Jim uses in terms of determining his chart of the day. You can see right here on the bottom of the sentence is that he found it in our top stock page, but it was one of the ones that had the most frequent number of new highs in the last month. So again, validating this kind of concept of it's okay to buy new highs as long as there's other information or other cluster of information that's going to give you, that confidence. Okay. So, many of you might be saying at this point, hey, yeah, John, this is really easy for you to sit here and show me a lot of the stocks that are in the S&P that are already outperformed, but how do I get to that process? Or how do I can find those stocks that are in the first 3 months that could be outperformers? So let's do this. Let me go back to stocks. And what I'm going to do is I'm going to go to Russell. And let's cast a really wide net. Let's look at the Russell 3000. And let's do that same process that we just talked about. We're going to screen on the Russell 3000. And let's do new highs. Let's look for high date and year to date, like we did with the S&P. Again, year to date being about 6 months. And made a new high, let's say, in the last week. But I'm also going to do what Jim does. I'm going to come back in here under new highs, and I'm going to look at how many number of new highs, let's say, in the last 3 months. And I'm going to look at that result. And out of 3,000 stocks in the Russell 3000, there's 62 stocks that are making new year-to-date highs. Certainly some candidates for us to start looking for trading opportunities. Now, one of the things that I will look at is in terms of this relative strength concept is I do like to look at industries or sectors that I'm seeing a lot more of these performers in, and that can give me clues to look for other stocks. There are some in here that are one-offs or in one particular sector, but if we look at, a large majority of these Russell ones are in the medical or in the pharmaceutical, large pharmaceutical. In other words, the healthcare sector. right? The other large group I see are in the food, in consumer staples. Again, kind of these defensive, recessionary proof stocks, right? Beverages, right? Funny little story is, you wouldn't think that alcohol beverage company would be a good recessionary proof stock, but it actually, in bad times, people drink more. I don't know, I guess, but maybe that could be something there. So let's go back to the top of our page here, and let's look at number of 3 highs in the last 3 months, and there's our H&R block, which is right at the top of the list. But number 3 here is Grocers Outlet, and it's had 17 new highs in the last 3 months. Again, I can come into this little uh, plus sign, and it's kind of going to give me a chart, and you can kind of see the picture of this chart. You can see this stock has done very, very well, in recent. If I open up the chart on this one, 6 months, wow, that's really a nice trending market. Again, look at our unbalance, right? Every time we're making a new high, our unbalance is going higher. Every time, higher highs, higher unbalance, right? Now, what has happened? Well, in the recent weeks, right, we've made a couple new highs, but our unbalance has not. So this could be, again, an indication for me that this particular stock maybe has run its course. Now, I'm only looking at 6 months, but let's look at this stock over the last year. And it started moving back, in October. So now this stock has been October, November, December, and now we're into July. So what's that? About 9 months. So maybe this stock has already run its course. Again, what I might do at this point is look at a higher time frame and see if it's run up against some potential resistance. And sure enough, it looks like we're bumping up against resistance. So again, if I'm into buying this stock, right, what do I need to see? I need to see us take out this high and see our unbalanced volume get above this value here. Until then, I'm not buying strength. Maybe I'll buy a dip on this one because I think this one is definitely one of those recessionary proof stocks. But if I'm already long this one, maybe this is where I use a little bit of due diligence in terms of setting some kind of protection. The other one that was on that list was, and it looks like it's dropped a little bit today. Let's see where it was. Oh, there it is. FTI Consulting. And again, let's open that one up. And again, what I want to see is, our unbalanced turn, crossover, positive trend, making new highs as we're going on. So notice that again here, you can see, we made a couple new highs, but our unbalance was not turning positive. So I'm not into buying the stock. But when we broke above this recent high and this high in my unbalance right there, that would have given me permission to ride this momentum. Now, again, let's look at a higher time frame. What do we see? Is there any resistance in this stock? 20 years? No. So this would give me a lot of confidence in terms of, yeah, if I'm making a new high in this one, this stock maybe have a lot of potential to go a lot higher because there's really nothing to slow it down. And so to come back full circle, as Gene had pointed out, chart of the day, if you're not getting this, if you're not signed up for the chart of the day, these are great candidates in terms of this kind of this study, this momentum study. Not only is here's Cigna, but good job, Jim. There's our FTI, and just a little bit lower, There it is, Gene. I told you your head would explode. There's grocery outlet. So great source of information. Now you have the skills to have a greater confidence in terms of how I can look at these high momentum stocks and believe that they're going to continue to trend in a positive way. All right. Oh, right on time. Good. I like it when the plan comes together. All right, so what are some takeaways? All right, remember, relative strength theory kind of says that, stocks that have performed well for 3 to 6 months tend to outperform for the next 3 to 10 months. So, in other words, don't be afraid to buy a new high in a stock that is making a new 3-month high, right? As long as, you can put the pieces of the puzzle together. Momentum-based strategies that combine both this trend analysis, right? Higher highs, multiple highs, and market relative strength. In other words, those stocks that outperform based on the broader market, there is empirical evidence that says that these strategies tend to be more profitable. I think there was a study in 1967 by Robert Levy on this theory, and I think the result was, it's like 1% per month that these stocks that have greater relative strength outperform their peers or the overall market. Now I know 1% per month, excuse me. That doesn't seem like a lot, but in the old days, if you made 12% in a year on a stock, that was a good year. Markets are a lot different today, but there's been other follow-up studies that have proven this theory as well. So identifying relative strength in terms of an individual stock, like we did with, we looked at the Russell group and the cluster of stocks that are coming from a certain sector or industry, right? That could lead us to other opportunities. In other words, I might look exclusively in that sector to look for those stocks that are starting to catch up with the other outperformers. Unbalanced volume is an easy technical analysis tool that can help us identify this accumulation of stocks in a particular stocks. Remember what we want to see. Don't get caught up in those minute price movements, or excuse me, movements of my unbalanced volume. We want to look at for two things: trending in a positive direction and continuing to make new higher highs in the unbalanced volume, as well as with the individual stock price. Keltner bands and turtle channels, a number of new highs, are a really good way to confirm that positive momentum. Again, this cluster of evidence that we want to look for to give us permission to buy higher highs. And then the final thing, which just brings us all back into full circle, is that stocks that fight the broader market breadth, which is what we're seeing now, is a market that is certainly could be argued in being a bear market, but in recent weeks maybe we're kind of trading sideways, is another sign of strong momentum and greater relative strength. Remember our first segment. Only a very small handful of stocks. In the S&P, only one stock was making a year-to-date high. Well, when we did that analysis, General Mills, we noticed that not only has that stock been doing well, but it's been doing well for multiple months. And could that be a stock that continues to outperform in light of this negative breadth that we're seeing in the broader market? Okay, so I do have a few moments here before we end. Let's see if there are any new. Did you send me any new questions, Gene? Let's
Yeah,
see.
I think I sent a few in here. Let's see. We ordered a couple more. They're coming in waves here.
So Wayne asks, can I use this in inverse with bear markets? Yes, Wayne. Yeah, the criteria that I just showed you. You can do this. Now, bear markets are a little bit different than bull markets, and in terms of the unbalance, we're looking for accumulation, right? And in the bearish market, we're kind of looking for, distribution or selling, right? So, the unbalanced volume will actually be turning lower. So it's a little bit different. I would rather have you watch the video on like how to trade bear markets that I've done and you learn those techniques. But yeah, you can use it in reverse, all right? So question is, do I use logarithmic or linear scale? So in this presentation, I was using linear scales. So Roger asked, do I rely more on unbalanced volume or MACDs and RSI or combination of these? Yeah, Roger, I use them all. I like unbalanced volume to really kind of give me that confidence, especially when I'm looking at breakouts in terms of my stock prices, where MACDs and RSIs, I'm really kind of looking at that change in momentum, maybe as an opportunity to look at maybe not in terms of a breakout, but maybe a bottoming, a buying a dip, so to speak, or maybe giving me that cautious indicator that when I'm getting towards near a top. All right. So Zach asks a really great question. He says, as far as price targets for stocks, how, where I might sell. So, again, Zach, the combination of looking at an unbalanced volume when it starts, I'm making new highs, but the unbalanced volume is not confirming it. That would be a good sign. Again, I'm not quick to take profits, but at least put in some profit protecting processes, selling calls or buying puts. But again, what I did was, if I'm looking at a stock that is making a large momentum movement and I believe in relative strength, and I'm looking at a stock that's been positive, let's say for 3 months or 6 months, then I'm going to look at a weekly chart and look for those areas of resistance. Remember, I showed you that with the grocer outlet where we are coming up against that resistance. We saw that with Lamb and Weston again. So would those be targets for me? Certainly, I would take off a percentage of my shares at that time, lock in some profits, and maybe using some of those profits to buy puts to protect me on the balance of my position. Okay, so great question there, Zach. All right. Yeah, they are coming in a lot of questions here. So Gary asks, the same technique work on lack of momentum. I think I kind of explained that. Yeah. And Harry asks the same thing. Can we use it in reverse? It does work in reverse. It's just a little bit better on that. And then Jim comes back with another question for me, and he asks me, if we buy stocks hitting higher highs, should we short stocks hitting higher lows? Well, Jim, in relative strength theory, they do say buy the winners and sell the losers. So in that sense, I would say yes. Okay. All right, great session today. What do you think, Gene? Was that a good session?
Yes, really, really good session. And if John did not answer your question, because they keep on coming in here, if he didn't get to your question, please email our support group, support@barchart.com. They're a great resource for you. They're happy to answer your questions, and they'll be able to follow up with any unanswered questions that you had today.
All right, so before we close up today, I just want to remind you all that, all of our sessions are recorded, and you can watch them either through our archive page here, or you can use our YouTube page. You can watch them. The other thing is, if you're not getting notified of our upcoming sessions, make sure you sign up for notifications. We're not going to spam you to death. All we're going to tell you is, hey, there's a new session coming up. And the new session for next week is we're going to look at short-term chart patterns. So the concept here is when we talk about short-term chart patterns, we're not talking about a period of time. We're really talking about literally almost one bar or one candle. What is the information that I can discern from just what is happening inside of one candle and how that one candle maybe relates to its preceding candle. So short-term patterns are usually just one candle patterns or two candle patterns, or maybe a combination of 2 to 3. So just a few candles or a few bars. And, they're not really trading signals. But again, when we talk about this cluster of evidence, in terms of all the other tools that we have in our toolbox, these can be very powerful tools that help us to be a little bit ahead of the curve to anticipate changes in price or look for potential trading opportunities. So I hope you guys come and join me for that one. All right, anything else, Gene? Did I forget?
No, I think that's about it.
All right, well, thanks again. What a great session. I want to wish everybody the best of health, stay safe out there, and the good of all trading.